What is up? It is Sam here, and we are going to be talking about some super awesome stuff today related to taxes and business and crypto. What if there was a way for you to not pay anything and put a solar plus batteries plus HVAC plus roof plus hot water tank on your property and you didn't have to pay for it? That is what we're going to talk about in today's video and some of the tax implications behind it. So with that being said, if this is your first time here, what's good? My name is Sam. If you're returning, it is good to freaking see you. Okay. So first of all, I wanted to talk about W-2 versus a business and how that works for like taxes and expenses. Then look at the income statement for how that would actually play out. We're going to talk about how somebody could actually use their house as a business, and a lot of people don't understand this or realize this is actually relatively simple. You could rent your house to yourself. So we're going to cover that. We're going to talk about depreciation. What is depreciation, but also the implications of using depreciation to help grow your nest egg or your bag faster. And we've got a whole example on that set up. Then we're going to talk about the benefits of actually going through this process, because it's numerous. Like there is benefits related to the increase in cash flow that you get from a tax savings, as well on multiple different levels on here, plus the increase in the value of property and an increase in the equity on the property on a monthly basis. It continues to appreciate. And if you think about HEX or liquidity providing, you could actually utilize crypto to make the payments for you so that you don't actually have to make these payments for yourself. Now, what am I talking about? Well, let's first talk about, and then if there's anybody watching here leaving comments, I will get to the comments after I get through some of this information first. So for me, I've always enjoyed business, and one of the reasons why is because of the income statement. What I mean by that is if you look at your personal income statement, if you work a job, you get a paycheck. So if you follow the sequence of how that cash works, you earn income, you pay taxes, and then you get what's left over, right? And then you pay expenses. That's how it works. Now, when you own a business, the sequence of cash flow is different, and that sequence matters because then you can influence things. So business purposes, it goes cash in, right? That would be your earnings, like in the W-2 example. Then it goes expenses, and then it goes taxes, right? And there's a difference between those two. The taxes and the expenses flip in the W-2 example versus the business example. Now, why is that important? Why is that beneficial for business purposes? Well, if I were to tell you that we are going to play a game, you and I are going to play a game, and the outcome of the game is, $10,000. And you're like, okay, cool. That sounds like a cool game to play, right? I get $10,000 if I win the game. And then I was like, but I get to create the rules of the game. Well, that, so to speak, is how business operates from the cash flow standpoint, because cash in minus expenses, who controls expenses? Those are kind of like the rules that are going to dictate how much you pay in taxes. So cash in, your sales, your revenue, etc., minus expenses, what's left over is your operating profit, and that's what you're going to pay your taxes on. Now, who gets to control that number? Your expenses do. So if I'm controlling that number, then I can just do whatever I want with that number to change my tax liability. And that is the essence of like what we're going to get into as we get into the solar and the crypto piece of it. So remember the distinctions there. W-2, earnings minus taxes minus your expenses, right? Because you basically get the money, then you can pay your expenses. In a business, cash flow, that's the sales, the revenue you're getting in, minus expenses, then minus taxes, and then what's left over. So there's a difference in the sequence there. Keep that in mind. Now, one of the objections that people are going to bring forth with this is that they own a primary residence and they live in it, so they don't have a business, right? Because they work a W-2 job. Well, working a W-2 job could actually be more beneficial to somebody working a W-2 job, right? I work for myself, so I'm in the business category of things. But if you had a W-2, this could actually be better for you because you're paying your taxes on a monthly basis, right? Every 2 weeks when you get your paycheck, they're taking taxes out of there, assuming you have withdrawals, right? And you're not just pushing them all back to the end of the year. I think there are exemptions on your W-9 that you fill out or something. Well, if you own a property and you turned it into a business, then you could increase your write-offs, which would then impact your cash flow. Remember how I said that the sequence of cash flow matters, right? Business, you have cash in, expenses, taxes. W-2, cash minus taxes, then your expenses. You could take your house, put it into an LLC, or just start renting it to yourself, right? You set up an entity that is your business. You have a lease with your business and you rent, so say your mortgage and all your, or if you want to wrap everything in, you can do it that way, or just your mortgage, say. Your mortgage is $1,500 a month and you're renting, look at market rates in your area, say it's $1,650. So you do a lease with your business for $1,650 a month. And you set up banking, you keep it all separated, you document all this stuff, then you could effectively turn your house into your business. And it might sound strange to you, but a lot of the things that people are like, oh, you can't do that thing, that's illegal. That's just because it's a story you tell yourself. When in reality, there's lots of people who do that. I rent to myself, right? But you can use, this is, by the way, I should probably get this out of the way right here. I am not your accountant or your lawyer. You should talk to your lawyer and your accountant. I am not a lawyer or an accountant. I'm just doing this for educational and entertainment purposes. So none of what I say should be construed as in any way, shape, or form as financial advice or legal advice. So talk to your own fucking accountant and lawyer. I have to say that because the United States, super litigious. So put your house into an LLC, rent your house from the LLC, then you have a business where you can take depreciation on there. Now, let's get into the depreciation talk here. What is depreciation? You've heard of depreciation. Surely you have. You've probably heard that you can depreciate your house or cars or things that have asset lives over a period of years. Well, depreciation is a non-cash expense. So from like a profit standpoint, it makes you look bad because a depreciation is still an expense that shows up in the income statement, but in reality, it's not a real expense. So if you're just looking at the profit line, you're like, oh yeah, this person didn't make a lot of profit. But then if you add back the depreciation, you're like, oh wow, they made a lot more profit. And realize it's just what they utilize from a tax perspective to reduce their taxable income. And when you look at, say, a house, a residential, say a single family duplex, triplex, or quad, they're depreciated over 27 and a half years. Don't ask me where these numbers come from, but they are set out by the IRS. And if you look at, say, a car, it has a different depreciable life. So you depreciate a car maybe over 5, 7, 8 years. You get to talk to the accountant or look it up specifically. The same thing happens with, say, solar or a roof or HVAC or hot water tank, right? Or all of these things are depreciated over a certain period of time. A lot of those, I think, are 27 and a half years. Let's consider an example with depreciation. If you had, let me pull the calculator. If you have a property or something along those lines. What is that music playing? There we go. Okay. So if you have a property and you are depreciating this property over a certain number of years, how does that help you from a tax standpoint? Well, let's assume that there's a property that costs, let me see if I can share this screen with you guys quick. We can do this in a whiteboard type of a setting. Hopefully you guys can see this. Okay. So let's say that we have a house that is 300K. Oh, by the way, you should press the thumbs up button and the like button for just the extreme artistic ability here. Valiant, what's good, bro? Valiant brand in the house. Thank you, sir. Appreciate the support. So say you have a property that's 300 grand. Say the land value is $50,000 because you can't depreciate land. TRT, tester levels, can you depreciate trend gains? TRT, tester levels, and I will be going live with GRC, somebody else in the community, to be talking all fitness related stuff at 6:30 p.m. EST on the other channel. Hey, tester levels, can you drop a link in the description or in the comments here for the 6:30 p.m. live stream so that anybody who is here is able to actually see that? Red Squirrel, what's good? Okay, so in this example, the house costs this much. I'm not going to spell out house, it takes me too long. House costs 300 grand. The land value, which is I think in a HUD statement, I believe it is, that means this portion of it you cannot depreciate. What's left is 250K. So in this example, try to understand what depreciation is, and say if this was a single family home or duplex or triplex or quad, you would divide this by 27.5 years. For this has to be a business, as we just talked about. So what does that come out to be from like a tax savings perspective? To get an idea of depreciation's effect on your actual cash flow on a monthly basis. So if you do this comes out to be roughly $9,100 of depreciation per year. So what does that? There we go. What does that mean? What does that mean when you have $9,100 of depreciation expense from your rental property per year? Well, if you had 91, let's maybe see if I can get rid of some of this stuff here. If you had $9,100 of depreciation expense, remember how it is not real expense. It's a fictitious expense. So if you had $9,000 of taxable income, then this would net out so that you would pay nothing in taxes. If this was your only amount of, he can't post if he's not a mod. Test your levels. You know how to get the link. Okay, give me 1 second and I'll pull up the link here. Let's just play some intermittent music here. I'll pull this up and share this out. We're going to be talking about some really good stuff just to give you guys a preview at 6:30 p.m. EST. If you like steroids, if you like peptides, if you like biohacking, if you like crazy awesome shit, then I highly recommend you should check that out. We are going to be talking with a TRT expert. I will be on there. I just shared the link. Thank you for the update, Red Squirrel. Going on there at 6:30 p.m. EST. So now we get an idea of what depreciation is. How is this beneficial to crypto, or how does this relate to crypto? How does this relate to solar? How does this relate to the new roof, the HVAC, all that? I'm getting there. 1 second. Now, if we take a look at what the program is related to solar, it allows you to put on solar, batteries, HVAC, hot water tank, insulation, and roof, if that's your prerogative. Normally, those are depreciated over 27 and a half years, meaning that in that example, right, it would reduce your tax bill. And if you were taxed at the 30% rate, that would save you about $2,700. So it basically give you $2,700 free cash flow. I thought it was at 6, but I'll see you at 6:30. I think I scheduled it for 6. I think I scheduled it for 6:30. I just posted it there. I'll see you at 6:30. That's what time I told my buddy to come on as well. Okay. So if you stay on track, Sam, so the solar system in its entirety is depreciated over a number of years. Because of the way the rules work, you're actually able to take that entire expense in year 1, which allows you to take, if your solar system that you put on your house, and I'm not selling solar, but say it was $100,000 for the solar system, you get, first of all, a 26% tax credit. So that's $26,000, dollar for dollar reduction in your taxes. Fucking awesome. Because it's set up as a business, you're actually able to add back, so this is how you double dip legally for tax purposes, you're actually able to add back half of this number here. So let's do 100K minus 26. So this is $74,000. This is what you'd be able to depreciate because you've already taken this portion out. But according to the rules, you're able to add back half of this. So half of $26,000 is 13. This is super technical, guys. So if you don't like this kind of shit, then apologize, but this is the stuff that I enjoy. This means that you can have a expense against your income of $87,000 in year 1. This is astonishing. Because when you look at the tax benefits of this, you have the tax benefits of this, which is a dollar for dollar reduction in your taxes. So if you say you're making $150,000 and you have a federal tax bill of 40 grand, you can effectively subtract this from it, and you're paying $14,000, which means that you have drastically lowered your taxes and increased your cash flow on a monthly basis if you're W-2 by $2 grand. $2 grand. We're going to get into the crypto part in just a moment. Now, on top of that, this $87,000 you can also write off. A write-off is not as good as a tax credit. This is a tax credit, and this is a write-off. This is super sloppy. I'll try to update this slightly. So on a $100,000 solar roof HVAC, if that's your thing, what are the tax benefits, right? 26K credit and $87,000 write-off. So this one you're going to write off, and this one here you're going to it's just you reduce this against your taxes. So if you owe $40,000 in taxes throughout the year, you're actually going to owe a lot less in taxes. Now, when you take into consideration the cash flow implications of this $87,000, if you take $87,000 and say you're in the 30% tax bracket times 0.3, this saves you another $26,000 in taxes. So this way, this would be equivalent. By adding, let's put all this stuff together because I know this is probably super boring for people at this point. And adding solar batteries, this is what I'm doing for my property because this is a rental property and I also rent from myself, right? So this is a rental property for commercial purposes. I can put $100,000 solar system with batteries that I don't have to pay for because I can put it on a subsidized loan, which means the interest rate is going to be lower. I can write off the entire price of the solar system after I reduce the tax credits that I get from it. I also get the tax benefits of writing off the interest on the subsidized loan. I add value to my property. And then when you look at the potential cash flow implications from this, you have on a monthly basis, you don't pay a utility bill anymore. You pay a loan bill. So now what does that do? Well, before you have an expense, say $300 expense every single month that just goes straight towards a utility company. It's just a straight up expense. Now, say if you had the same bill, $300 a month, you're still paying $300 a month, maybe say it's $400, right? So you have a little bit of an increase. Hey Monica, so you have an increase in your monthly bill, and that is split into multiple parts. Part of it is interest you're paying on the loan, and part of it is the principal you're paying back. So now you switch from a $300 payment for your utilities to a $400 payment that you're paying equity back to yourself, and you're paying interest that you're using to write off to lower your taxes. So that's how it's split up. And then the cash flow, 300 versus 400, you can think of that as a premium to get the tax benefits associated with the solar system. So say throughout the year, that's $1,200. So you're paying $1,200 tax benefit to yield over $52,000 worth of tax benefits in year one. In year one, this doesn't include year two or anything else. Another thing on top of this, by paying that like going through this whole thing and thinking about the premium differential between $300 utility payment and a $400 loan payment for solar and batteries, that $100 difference can be thought of as a premium to lock in your rates. So when you pay this premium, you're effectively locking in the current rate for the system. In the future, we know how utilities operate. They basically are a monopoly, And so they have regulations that allow them to raise rates by 3 to 4% roughly per year. So we already know this, that utility prices are going to go up by 3%, 4% every single year. And you can think of that as the inflation that's added to your bill. That's why utility prices go up over time because of this. And when you purchase the solar and batteries and potentially get a new roof if that's your thing, or high efficiency HVAC, and the payment goes from the utility company now to yourself, you're effectively locking in those lower rates for the future. So you basically shave off the inflation, and now you're giving it to yourself in terms of the house prices going up. Now, think of what I just said relative to, say, HEX or providing liquidity. If somebody's saving about $52,000 a year, assuming that they make enough taxable income to take advantage of the $52,000 of tax credits from the solar and batteries, etc., they are able to reap those benefits in year one, and they can take that, put it into HEX, put it into liquidity providing, so that they actually don't even have to pay. They don't actually have to pay that bill. I think of somebody who does this early in the year, who pays maybe quarterly taxes as a business owner, or somebody who does this as a W-2 person, and they change the election, the W-9 form with your employer. I think it's, remember, I'm not a lawyer, I'm not your fucking accountant either, so you should talk to somebody in your HR department about changing your elections if you're at a W-2 job. But you could change your election so that no taxes or very little taxes are actually pulled out of your paycheck, because you know that if you're putting this onto your house, you're going to yield these tax benefits if you set it up as a business. And you could take those savings that you're giving the government, an interest-free loan by paying your taxes early. That's effectively what you're doing when you do a W-2 job. You're giving them, and you're paying taxes every paycheck. You're giving the government, who we know is not a good steward of taxpayer money, you're giving them a free loan. Will you give me a free loan? I'll take better care of your money than the government. I guarantee it. And you do that by giving the government a free loan on your money. Doesn't make any sense. Instead, you could take that money and you could invest it to pay you. Right? So say, in the example we're just going through, somebody's making 120 grand and their federal tax bill is going to be $30,000 for the year. So they can set this up so that they collect that $30,000 and they put it into HEX, right? And they stake this $30,000 So they can do a monthly stake that comes out, right? Every single month in, say, January, right? January following year, I'm gonna put this out for one year out, so that way it will take care of my $400 bill in 1 year. Month 2, for February, March, April, etc. throughout this time period, so that savings actually pays off your solar system, pays off your battery, pays off your new HVAC, and you add to the value of your property. Hopefully some of this is not completely as dry or as far out of your mind, you're able to grasp some of this stuff, but this is what I'm going to be doing this year, and this is how I think about things, and I wanted to share it with people to see if this kind of thing is actually valuable to other people who think like me, because I know a lot of people don't necessarily think this way. Now, for more on a personal side of things, you're like, oh wow, this is some crazy shit, Sam. Let's recap some of the benefits of adding solar, not having to pay for it, using a loan, and getting all those benefits because it's for business purposes. First of all, property value goes up, right? If you put a $70,000 solar system, battery pack, new roof, HVAC at your property, yeah, of course, right? You just invested into your property. 2, tax credit, which increases your cash flow if you're a business, right? You have to remember back to the beginning of the video where we're talking about the sequence of cash flows, right? In a business, it goes cash flow, expenses, taxes. In a W-2 job, it goes cash flow, taxes, then expenses. The difference between the expenses and the taxes in a business versus a W-2 make a tremendous difference. You also get the depreciation of the system. So you get tax credit, which increases cash flow. You get the depreciation, which increases cash flow. You have to pay the monthly payment, which in the case that we just went through with $100 grand, your monthly payment may actually be higher. So you have to mentally be okay with a potentially higher payment if you take the appropriate steps. That's obviously not going to be a problem. You just have to actually plan ahead. And if I'm talking about any of this stuff and that's not in your personality, or you're not organized, or you don't prepare for things, then get your shit together first before you even try to slightly comprehend what we're talking about in here. You also have the interest write-off on the loan. So if you put $100,000 on a 2% loan for the solar, you're paying $2,000 a year in interest. You can write that off. You can write off the interest because it's for commercial purposes. Remember, this is for business. You also have equity pay down. So in the example of $400 payment a month times 10 months. So you're paying $4,800 a year in payments. $2,000 of that you write off. $2,800 of your payment you're actually paying to yourself instead of the utility company. Let me just touch on it for a second. If you are making a payment to your utility provider here in Florida, I use Duke Energy. So Duke Energy, I'm paying $300 a month, sometimes over $300 a month, sometimes a little less than $300 a month. And that just goes to Duke, and that's just a straight up expense. I don't get any extra value than just electricity. And you're like, just electricity? That's pretty good value. Completely agree. But there's another way to structure that with the solar and batteries, because then that payment from $300 now goes to $400. But now of that payment, part of it is interest that I'm writing off, so I'm getting a tax benefit from it, where previously I wasn't. I'm just giving it to Duke. Plus the other portion of the payment, I'm paying my loan off. So I'm receiving equity pay down, right? I'm basically paying the principal balance down on my loan. So I'm receiving that balance, that in equity. If I chose to sell the property, I get the benefit. If I'm paying $300 to Duke Energy, I don't get any of that benefit in the future. So that's another one of the benefits there. Also, more of the heady and conceptually, which I'm going to mention in a second, related to the payment, and then we're going to talk about the HEX and the LP position in a second. So, $400 a month. This is going to basically be the premium that's going to lock in your rate so that you don't have to pay inflation. And if you're watching this and you've heard of HEX, right, you know what HEX is. And you know that HEX actually pays you inflation. Wouldn't it be nice to receive inflation in other areas of your life than just crypto and just in HEX? Well, you can do the same thing by setting it up this way so that you get the inflation instead of it going to Duke, right? Duke Energy, as in my case, every year they get to bump up my bill by 3.5%. Hey, bitch, take this, boom. Hey, bitch, take this, boom. My energy bill's higher. I don't get that inflation. But when I use debt, I get that benefit, right? Because debt goes down in value when there's inflation. So I get that benefit. And now I don't have to pay the higher bill from Duke every year. So I'm able to earn the inflation just like you're able to earn inflation by staking HEX. By going through similarly like this with solar and better tech and a loan and as a business, you can actually earn inflation on your house too, instead of just the property value as well as the energy piece of this. Maybe I can do the same thing with a well, like putting in a premium well and a filtration system, so that way I could actually cut out the water company, which I think I paid $200 to $250 a month for my water bill. So $200 to $250 a month, paying that to the city for water. What if I put in a well and pay that, use a loan to do that, and then I can collect inflation on the water bill as well as the energy bill, the same thing you do with HEX. So let's talk about HEX and let's talk about liquidity providing. But in order to talk about those, I want to reference the beginning, the business versus the W-2. In this example, if this kind of thing is interesting to you or whatever, feel free to reach out. Happy to chat with you about this stuff. Also, you talk to your accountant and or lawyer, right? So if you are setting this up and a W-2, and you know that this is the path you're going to follow to go forwards, you can change the elections for your tax purposes, right? I believe it's a W-9, which will increase the exemptions. The verbiage or the vernacular might be slightly different, which basically means there's going to be less withholdings from your tax bill. So say if you're making, $2,500 a week, and your take home on that is $1,600, $1,700, right? By changing the elections, maybe your take home instead of $1,600, maybe it's $2,100. So you get another $500 per month, or $6,000 a year. Now, in that example, $6,000. Think of if you took $500 and you staked that in HEX. So you take in January, or you can take it like hey, we just entered the month of June or whatever. This is kind of interesting. I'll set it up for the month of June, right? Take that $500 for January, and you stake that for 1 year from that day, because you have to wait till after the tax year, which is starts in January. So you take that and you put it 1 year out, right? Month number 2 in February, maybe you take that and you put it in 14 months out, and you stagger them by every 2 months or something like this. Then, as you tick throughout this year, you've effectively, if you did it every 2 months, you'd effectively get it set up for the next 24 months, collecting inflation in HEX. Instead of giving the money to the government to waste on dumb shit in terms of a deductions from your paycheck as a free loan, you take that money and you invest it and you collect the inflation in the system with HEX. And then when it comes due, you use those payments to actually pay your solar system off, right? And the $500 maybe is $600, maybe the price of HEX has doubled and you could pay off, or maybe instead of 8 cents or 7 cents or whatever it is, maybe it's 36 cents. And after 3 payments, you could pay off your whole thing, right? After, 3 of those 2-month segments of you staking your HEX out into the future, you're actually able to pay off your whole system. Or maybe it's cut in half, right? And you only have $200 or $250, but then you've also collected the inflation. So say it's $250 and it's 4 cents for HEX in a year from today. And the you've been able to collect, 8% or 10% or 11% of the inflation in the HEX system over that time period, and you're left with $311 or something. So you take that $311 and apply it towards your payment, and you just go through the process. If that's scary to you, don't do it. If this seems intimidating to you, you grab the balls and actually do it, right? Educate yourself and learn and take responsibility, or just don't do it, right? Like the stuff I'm talking about is probably very complex to a lot of people. If you have any questions, you can let me know in the comments. Another way. What up, GRC? We're going to be going on at 6:30, bro. We're going to be going on at 6:30. There's a link if you guys want to watch the other video when it comes out. We're going to be talking about fitness-related stuff at 6:30 p.m. EST, fitness, bodybuilding, biohacking, peptides is what we're going to cover. Peptides related to HGH. If you have a pain, if you have an injury, if you have a discomfort, maybe you want to improve your sleep, maybe you want to improve your skin, maybe you want to get a little leaner or improve your muscle mass, there's peptides out there to increase HGH. So we're going to be talking about some of those come 6:30. Now, to get back into crypto in this example, what if you were the business? So in terms of the business, say the tax benefits, because now you're writing off the entire system. You're writing off the entire system this. Also, that the cash flow in terms of the deductions doesn't even take into consideration the reduced tax bill you have at the end of the year. I want to help with a few things live. Okay, perfect. GRC, I will be off of here probably in 15, 20 minutes, and I will get into the green room for the 6:30 show. So when I get off of here, I'll give you a buzz, and you can come into the show and bring any information you have as well to that. With the W-2 example, you are not only saving the money every single month that you can invest, but you're also at the end of the year, they say if you were making $135,000 a year, you're going to pay $35,000 in taxes. You're going to be able to reduce that by $26,000. So you're going to get a lot of that money back that you could just reinvest. Now, in terms of the business, say this is saving me approximately $3,000 a month in tax savings by putting solar on. What can I do? I can take that $3,000 and put, say, after 30 months, I have $30,000. After 10 months, I have $30,000, and I can earn 10%, but in providing liquidity on, say, Uniswap, or maybe you're like, that seems ridiculously high, right? Because earning 10% a month seems extreme for anybody in legacy. So what if I took that $3,000 and every single month I put it into HEX, right? I could do that, but I like the idea of the liquidity providing, because then I get a monthly bill, a monthly cash flow that I can just use to pay my bill every single month. And that cash flow is also not going to be taxed because of all the tax benefits associated with the solar system. So hopefully some of this stuff sparked some ideas. Hopefully some of this stuff was interesting and valuable to you in terms of the way you can actually think about these things. We covered a bunch of different stuff. If anybody here is listening and they have any questions related to the taxes, the solar system, how all of this works, let me know in the comments. One more thing that I want to touch on for me personally from a business standpoint, and ask me all these questions. So I've got multiple businesses, but there's a rule that says if this business has losses, I can't just net them against this business. What does that mean? Well, if business A has $100,000 of losses, right? Depreciation are not a real loss because it's all on a loan, but I'm able to depreciate $100,000, so it's a fake expense, but it reduces my tax bill. I can't necessarily offset that against business number two because I'm the common denominator. I own both businesses, but I'm only allowed to take a portion of the loss in business one to offset the income, the cash, the profit in business two. So how do you get around that legally, right? I'm all about legally and ethically following the rules. They give us the rules, you give me the rules, I'll figure out a way to get around them and navigate it the way I want to navigate it. How do you set this up so I can use all those, right? Well, what I can do is I can set up a holding company that's going to hold both of these. You can think of this as a wrapped hedron stake for those of you in crypto, right? If you take your HEX stake and you put it into, or basically instead of natively staking your HEX, you could stake your HEX through Hedron, and then it's a HEX contract that's wrapped with a Hedron contract. So you have one wrapped inside of the other. Well, I can take both of these businesses and switch the ownership from me, for the ownership of these are both now in this business, and I own this business. So the holding company owns these two businesses. Now, because the income and the losses are now coming to the same spot, what does that allow me to do? Oh yeah, that's perfect for me. Instead of having them separate businesses where I can't net the losses against the income, by bringing them together into a holding company, the losses from this business, I'm able to offset with the gains from this business, and I can utilize those tax benefits more effectively. So that is the route I'm actually going through right now. And I want to share this with you because this stuff gets me super excited. I love this kind of stuff. Not everybody has as much of a crackpot on this kind of stuff, but this is, there's people who have 47 different, not even joking, even probably way more than that, but 47 different, for metaphor purposes, entities. And you can set them up in a way that allows you to operate your businesses in a way that protects you from a liability standpoint, as well as moving the cash in certain directions legally to reduce your tax bill. And this stuff is super fascinating to me. It's been very fascinating. There's also ways to do this on a geographic basis, but we'll talk about that in a future video. On like a global basis, you can actually structure things, because that's what companies do, like Apple and Facebook and Tesla and all these companies, right? They hire very smart accountants and lawyers, and they set up business entities in different spots around the world that allow them to reduce regulations and or reduce taxes legally. So why can't we do this? We can. We're 100% capable of doing these things, and this is exactly what I'm doing. If you guys found this stuff interesting, if you found this stuff helpful, if you found this stuff confusing, but you know somebody else who would benefit from it, take a second, press the share button, copy, and then text it to them. Text them and let them know, hey, this whack job is talking about taxes and solar and business-related stuff, and I know that's something that you might enjoy or understand more than I did. Let's talk about it, and send them this video. Appreciate you, Monica, and Test Your Levels, and GRC, Red Squirrel, Bally Brand. You guys are amazing. If whoever is listening at this point, thank you for listening. If you have any questions, you can reach out to me on Twitter. There's a link down below for Twitter. When you get over there, press the follow button. And Monica says, thanks for the stream, Sam. I'll repeat. I'll repeat to better understand. Awesome, awesome. And if you have any questions, I'm sure we'll be chatting. Red Squirrel, I appreciate you for stopping in, bro. And if you guys know me, I'll be on at 6:30 on the other channel related to fitness stuff. I'm going to tweet it out on Twitter, or if you scroll back in the comments, it is there as well. That one comes on at 6:30 p.m. EST. Jim Rat Crypto is going to be on there. Test Your Levels is going to be on there. I'm talking peptides, biohacking, all sorts of awesome shit. Appreciate you guys. Talk to you soon. Let's get this out of here. Thank you. Later.